Hello. In this video series, we will learn about and analyze mortgage-backed securities and mortgage-backed securities market. We will begin by understanding the structure of the MBS originating from the US, types of securities traded in the market, and we will analyze mortgage pass-through securities, their risks, and cash flow profiles using practical examples. We'll also learn and practice key concepts such as PSA, CPR, SMM, weighted average coupon, weighted average maturity of MBS, and prepayment risk specifically. So let's go. But before we begin, let me give some context into what you're learning. As recently as 1 month ago, a deal was secured with the financing by the Asian Development Bank to launch Uzbek Mortgage Refinancing Company, or UMRC, which effectively jumpstarts the Uzbek mortgage lending sector for the first time. And you can read a lot of news about it on the internet. That means the sector is just starting and they need brains. Now, definition of mortgage-backed securities and MBS market. Let's play this video so you get a little bit of understanding of what MBS is in the language of Investopedia.
Mortgage-backed securities, or MBS, are a type of bond representing an investment in a pool of real estate loans. To understand what a mortgage-backed security is, we need to go over what happens when a bank issues a mortgage. Let's look at how a mortgage becomes an MBS. Tony wants to buy a house costing $500,000. Usually, Tony would go to his bank and apply for a mortgage for $500,000. And in return for loaning this money, the bank would make Tony pay interest on the loan at, say, 8%. Before the world of mortgage-backed securities, the bank would simply keep this loan on its books and receive principal and interest for the duration of the loan, say 30 years. One downside of this arrangement was that the bank had to keep this loan for 30 years, tying up capital and resources. One day, the bank had an idea. It could sell the stream of interest, the 8%, and principal payments from Tony's loan to investors to get it off the bank's books and free up capital at the same time. The bank would make money simply from originating and servicing the mortgages and from other associated fees. In order to sell the interest streams to investors, the bank bundles Tony's loan together with hundreds, maybe even thousands of other mortgages. Then the bundle of mortgages is sold to an investment bank in the form of a single bond. The investment bank partitions the pool of loans according to quality and sells the sections to other investors. So although Tony makes payments to his bank, the loan is actually in the hands of investors. Mortgage-backed securities are essentially a way for banks to free up capital and provide a way for investors to buy into mortgages.
So you got some idea about what mortgage-backed securities are. Now let's look at the structure of the MBS market in the US. So first you got a mortgage loan that's originated by a typical bank called mortgage originator, and they make a loan to Tony, as the video showed in the example. So the intermediaries can be brokers, services, insurers, etc. And then these loans are pooled into mortgage pass-through, or called mortgage pass-through securities. And there are, in some countries like US, there are certain agencies or government-sponsored enterprises that pool these mortgages and basically turn them into securitized kind of bonds, mortgage loans with similar characteristics. Then you've got basically these organizations that take a mortgage pool and makes the cash flows more predictable by assigning priority of claims to the cash flows. This typically could be an investment bank that creates tranches of highly rated versus the poorest quality in terms of creditworthiness. So, and then you create an MBS portfolio based on these different tranches and then offer to institutional investors based on their risk return, basically profiles, risk return requirements, and investment policies. Depending on the risk return, then they choose the ones that they would like to invest. In the next video, I'll talk about risks associated with these mortgage-backed securities.